Welcome to Electrified, it's your host, Dylan Loomis. Quick announcement, so on upcoming Sundays, not this one, but in the future, I will start having video uploads every now and then, so if you want to turn on notifications, it could be a good idea. I really hope these are extra informative, and one of these episodes, we're going to have a guest. I'm not going to announce who it is, but I do want you to drop some questions below. It is an analyst, somebody that you've probably seen on CNBC, so any questions you may have about Tesla stock, financials, the macro space, the tech space, anything in that realm, drop your questions below. Do me a favor, please like the questions that you're most interested in so I can get an idea of what you guys want to hear more about. And so far today, a lot of the market in green. Tesla so far up almost 6%, NASDAQ up over 3%. Just want to remind everybody, don't get too crazy here. There could be many head fakes, many dead cat bounces, whatever you want to call it, over the next few months as the market tries to figure out where it's heading. And I just have to say, can we please stop with the articles that try to attribute every stock move to what's going on with Twitter? I do not think that's the case. Sure, it might have some small impact, but there have been articles written that all of Tesla's losses over the last few weeks are because of this Twitter deal. It's just completely insane. And more than that, if you look at crypto prices, they've actually become a leading indicator of sorts for risk on assets. For example, last night, crypto turned green, which served as a pretty good indication that the markets were going to open green today. But no, Tesla stock did not go from 1,100 a share down to 700 just because Elon bought Twitter. So while statements like this might be true, they are incredibly misleading. And this is such a good reminder that investing is just as much of an art as it is a science. I've said if we stuck to a disciplined investment philosophy and only invested in companies on a straight PE or free cash flow method, we would have missed Tesla, Apple, Facebook, Microsoft, Amazon, Nvidia, Workday. You get the picture. A quick story. One of my very best friends who has worked on Wall Street for years, knows valuation ratios and metrics better than anybody else, thought that Tesla would never eclipse $200 a share. This was obviously back in the day. We made a bet on it, and obviously I won the bet, but his problem was he was only looking at the numbers and the valuation metrics that have been used traditionally, and he ultimately missed out on Tesla. And I personally love finance. It's my background. I really enjoy valuation exercises. Just remember, it's both a science and an art because not everything can be quantified or modeled. I want to show you guys this FSD clip from Homars and let me know what you think. Is it a very impressive maneuver or did it just get lucky? So what to watch for is the timing of this car braking and when the car signals that it's turning left. So I think the signal comes first. You can see it now, and then the car brakes. So I think the car was starting to move over before it saw the brake lights on that car ahead, but what do you guys think? Tesla received an invitation from the Prime Minister of Malaysia to come set up shop in their country, but let's be honest, Tesla is being invited by people all over the world to come set up shop for obvious reasons, incredible for local economies and employment, all of that, but let's analyze, is this a good idea? Based on Malaysia's geographic location, the first thing that comes to mind for me is ports. Could this be another export hub since the actual auto industry in Malaysia isn't massive? So how not massive is it? We're talking around 500,000 passenger cars per year. There is, however, much more to consider than just the size of the auto market, especially because Tesla's already set up shop in the biggest auto markets in the world. Malaysia ranked 27th on the World Economic Forum's Global Competitiveness Index in 2019. The country also ranked 12th globally for ease of doing business by the World Bank Group in 2020. Thus, the favorable business environment has made the country one of the world's top investment destinations for offshore manufacturing operations. And what do we have here? According to the United Nations Conference on Trade and Development, Malaysia is the world's 5th best connected country in terms of shipping line connectivity, ahead of the Netherlands and the United States. So let me be clear, I'm not at all ready to argue I think this is a good move for Tesla because I just don't know enough. I just wanted to share a few things to think about. No surprise here based on how things were trending over the last few months, but reportedly Tesla has halted its plans to expand into India, and they are reassigning some of the Tesla employees that were working in the location. Tesla has put a hold on selling cars in India, abandoned a search for a showroom space, and reassigned some of its domestic team after failing to secure lower import taxes. Apparently, the Indian government would not budge on the import tariffs. Tesla wasn't ready to set up manufacturing in the area without being able to test the market selling EVs first. So far, no deal. Sure, this could be a negotiating tactic on Tesla's edge, but for now, plan on no plan to move forward. We get a new note from Morgan Stanley, but their price target remains unchanged at $1,300 per share. In summary, the world has changed in many ways this year. The supply chain is under tremendous stress, inflation is hampering demand, capital markets are less ebullient, the economy is decelerating, geopolitical risks are front and center. It is possible to be a long-term EV bull while revising down the adoption curve through mid-decade, to which I would have to agree. However, as you'll see in a second, I really believe Tesla is different. And here's a list of their reasoning, but they hit the nail on the head with this one. Where will the battery metal come from? We believe many of the headline-grabbing EV sales targets made by traditional OEMs were made without fully contemplating the availability and price of critical battery materials. JB Straubel has effectively said the exact same thing. All of these companies announcing all of these crazy numbers just to encourage their investors to stick along for the ride, while behind the scenes, they probably haven't done anywhere near the level of analysis required to figure out what it's going to take starting from the mine, getting to the battery pack, and ultimately into these new EVs. And it's really just now that we're starting to see that sentiment shift from overly bullish to we're treading much more cautiously. I'll include the article below if you want to read it, but it's basically just all of the auto CEOs saying the same thing, repeating this message. For me today, the supply chain crisis is the new normal. But why is Tesla different? Well, I'll springboard off Pierre. He said, simple disturbing analysis. Model 3 and Y sell for less than an equivalent ICE premium car with 30% gross margin. Electrified versions of these legacy premium equivalent cars sell on average for $10,000 more than their ICE equivalent, likely with less than 15% gross margin. His conclusion, the above mathematically means Tesla cars are 40% cheaper to produce than equivalent electric cars from legacy premium brands. It is the case for a multitude of reasons, and I don't see a credible path for competition to catch up. This makes 20 million units in 2030 very plausible. Now, sure, you can definitely argue this given all of these shortages and supply chain problems right now, but let's just roll with it and go back to what he said first. So let's put some numbers to this. We'll say a $55,000 average sale price for a Tesla. That would mean a $60,000 average sale price for an ICE equivalent gas car. And then based on Pierre's reasoning, if the electric version of those ICE cars is about $10,000 more, that would put the EV equivalent at $70,000. Now looking at the gross margin, Tesla's at 30% would yield $16,500 in gross margin per vehicle, and Legacy Auto at under 15, we'll just be generous and say 15, that would have it at $10,500 per vehicle. The result, Tesla making an extra $6,000 in gross margin per vehicle on a car that sells for $20,000 less. And even after all of the negativity and caution from the Financial Times event, all of those problems create advantages for Tesla. They have scale and pricing power. They're always thinking many steps ahead. They don't need to worry about generating demand for their cars. They're constantly removing parts altogether and vertically integrating others, reducing Tesla's reliance on suppliers. Tesla has industry-leading margins and demand that set Tesla up to withstand the next wave of raw material contracts that will most likely be less favorable given commodities costs. Basically, what will be a setback or a speed bump for Tesla will be a crippling blow to everyone else. We've learned that Tesla empowers employees to take risks and to break things in order to find better solutions faster. This is unheard of in the legacy space, where it can take years to make small changes. When you have a culture like this at Tesla with the best talent in the world that continually wants to come to work at Tesla, you get that secret sauce of innovation leading to Tesla making vehicles that cost 40% less to make. Tesla has no deadweight ICE business to manage, no dealership model to inflate prices to customers and to essentially steal margin. Tesla is basically unofficial partners with SpaceX, more of the brightest in the world, sharing material science breakthroughs to develop alloys for gigacast and many other things. There are thousands of small improvements happening every year, if not quarterly, and it's a culture of neck-breaking innovation that can't be matched by anyone else right now. Truth is, what I just said barely scratches the surface of the story, and I agree with Pierre, I don't see a credible path for competition to catch up. I'm not sure what's going on with the Tesla Semi reporting today. Everyone's talking about orders opening up. There's no tangible evidence given. They're just citing that the reservations are open on the website. The problem is they've been open for a long time. Going to the Wayback Machine, this is February 23rd. I'll bring it into the screen, and this was already available on the site. And these articles were acting like the price has been confirmed, but once again, going back to the Wayback January 20th, it was already out, public information, so maybe I'm missing something. Please let me know below. But Elon said no new vehicles this year, semi-production not to be expected until next year, so I wouldn't make anything of all of these articles. Starlink has a cool new feature on its website, this interactive map that will show you available waitlist and coming soon, so you can hover around the globe and see the status of Starlink. I'll link it below if you want to play around. It looks like the Twitter takeover negotiations are full steam ahead. Who knows what's really going on? Maybe Elon was trying to use this as a bargaining chip, because Twitter apparently just came out with a report saying less than 5% of its users are actually bots. And then this morning everybody said, oh, the deal's blowing up, it's not going to happen. But quickly after, Elon jumped in to say still committed to the acquisition. And Elon on the beta said it still needs more work IMO, but we can probably widen the beta a little next month. And lastly, perhaps a little comedy to send you off into the weekend. Fisker and Foxconn confirm Fisker pair production in Ohio. Yes, Foxconn, Apple's partner, the one that just bought the Lordstown factory, said that they will build Fisker's second vehicle, the pair, and it will start production in 2024 and have an expected base price below $29,900. Fisker and Foxconn intend to build a minimum of 250,000 pair vehicles a year. That'll do it for today. Please take a second to like the video if you did. Hope you guys have a wonderful and a safe weekend, and a huge thank you to all of my Patreon supporters.